Namaskaram friends, welcome to StockEdge. Myself Tufan from the StockEdge research team. If you're not aware, StockEdge is a SEBI registered platform. So after getting flooded with requests that why I am not creating new videos, I thought that let's make video. So I came today and now let me just explain that what is happening in the market. Fine. So yesterday there was new age or Gen X new age GST reform, right? GST reform, new age or next generation GST reform. But you can see that it opened with a gap up, right? Though the GST reform has been new generation or next generation GST reform, but this gap up has been like old generation, right? So that's the respective words that I have used. But let's see that what has happened today after market opened with a gap up, right? So you can see in the initial 1 minute candle itself, there was a kind of 100 points selling, right? And gradually after that, throughout the whole day, it came down and just closed around yesterday's day high. But the question is, why? Why after next generation GST reform, market is not reacting? I'll explain. I'll try to explain. Fine. So let me just go to weekly chart at first. Let's have a multi-time frame analysis in Nifty for upcoming levels. And then gradually I'll try to connect the dots that why market is unable to move right now. Fine. So in this particular chart, you can see that this is the weekly chart of Nifty, right? And I have extended this trend line from the bottom of COVID low, connected here and connected here. And now we are exactly hovering on this particular line. Let me just zoom in a bit. For that, I'm going to daily. So in this daily chart, you can see that this is that green line, fine, which I have drawn from the bottom of COVID low. And few days back, it took support exactly on this level and it bounced back. But interestingly, today's open is equal to high, fine. At what levels or at what zone? For that, you just see I have extended another trend line from this high, connected this one, and this was just below that red colored downward sloping line, right? Now, what is going to happen from here? Let me just zoom in a bit. So today's high or this particular zone will be the immediate resistance zone for Nifty to track, and on the downside this particular level you need to watch. But I'll try to explain that why Nifty is not reacting to that positive news, right? For that we need to go to dollar index. I am opening dollar index. I think I have explained this particular chart long ago. Why dollar index? Because you know it has an inverse relationship with the emerging markets money flow. Whenever dollar index comes down, money flows into the emerging markets. And when it goes up, money goes out from emerging markets. And India is one of the sweet spot of emerging economies, right? I'll try to prove my point here. See, dollar index was coming down, right? It was coming down. It made a bottom here. And this is exactly, I guess, 1st of July. And what I said just now, that when it comes down, money flows into the emerging economy. When it goes up, money goes out from the emerging economy, right? Now let us see the data, what data is saying. So for that, I'm going to StockEdge. So under this market section in StockEdge, you can check this FII data section. Fine, FII data, right? Over here, as I marked, that particular level was on 1st of July when dollar index made a bottom, right? Let's go and see the previous data point. I'm clicking on cash market provisional. So I'm just scrolling down a bit so that you can cross check historical data point also. So previously in the month of June, there was big green candles also. Why? Because dollar index was coming down and money was flowing into emerging economy, right? So FII flow was positive, and gradually from this June 30, now I'm scrolling up. So we are in July. You can see we are in July, and again I'm scrolling up. So there was almost all the days were almost red histograms, right? You can see this, right? And currently in August, you see the red bars. Why? Because dollar index is going up. So money is flowing out from our economy. FII flows is net negative, right? So why so? Now let's have a look at dollar index chart. For that, I would like to show you the monthly chart at first. So in this particular monthly chart, I have extended an upward channel which is from 2007. Right? Every time it came towards this level, there was a bounce back. 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 And currently we are hovering here, just above that particular secular trend line. Right? Let us see the daily chart. So in this daily chart, you can see that it is somewhat making a kind of W bottom, you can say, right? And for the last few days, you can see how it is creating a good base around this level, right? So from here, if it goes up, then obviously emerging markets will bleed. And if it comes down, then it will be a windfall factor for emerging economy. Now, another point I would like to share here is India VIX chart. India VIX chart. Everyone knows that, India VIX is basically the fear index, right? So in this particular chart, if you just zoom out, you will find that 9.5 to 10.5 or 11 is the secular base or long-term support of this India VIX. Right? And this is also known as fear index. This is also known as fear index. Why so? Because if it goes up, market will come down. And if it comes down, market will go up. Now let me just connect the dot a bit that what is happening in the current scenario. Fine. So the market is coming down, right? With a gap up, it is unable to sustain on the higher levels. One reason is dollar index, which I have explained you. And the other reason is this India VIX, which is hovering around this particular level. If India VIX would have been around this level, then there would have been conviction that market is going to go up because India VIX will come down, right? But as it is hovering around this level, that means even a small spike will bring the market on the downside. Let us see what has happened today in the intraday chart. I am opening 5 minutes chart. Fine. I'm opening 5 minutes chart. So I would request you to see the correlation that when India VIX went up on intraday basis, markets came down. And in this particular timeline, Nifty went up. Again over here, Nifty came down. Again, at the fag end, Nifty went up a bit, right? So what I'm trying to say is, as India VIX is hovering near its base, that is today it closed around 10.85. This is basically a red flag, a huge red flag for me. Please do track it minutely, because any day if one big spike comes, then we will see a big gap down. This is just a precaution that we need to take. We have to be more vigilant, we have to be cautious and track this India VIX minutely from here. Fine. So now I would like to share another important thing, that is, if you go to Elon Market's website, I am conducting, based on the requests of many candidates, I am conducting an offline technical analysis course. It will be done in our building, that is in Salt Lake Sector 5 office. It will be a offline face-to-face batch, and I will conduct this particular course. How to get it? The link of this particular course will be given in the description box below. You can check. Even if you go to elonmarkets.com, you will find it on the front page itself. If you want to click here, you can type technical analysis offline batch. Just click on this. You will land on this particular page and you will get everything related to course highlight, introduction, what are the topics that will be done or covered in this course. Everything is there in details. Fine, you can get in touch. If anyone is from Kolkata, if you are thinking that you want to do this particular course, you can get in touch, because the first batch is going to start from 6th of September, that is coming Saturday, that is day after tomorrow, right? So thanks for watching this particular video. Please do share it with your near and dear ones, and yes, don't forget to put a thumbs up. Thanks for watching. Have a great trading session tomorrow. Goodbye.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.